Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, February 21st, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts just to back up just a little bit. This is a weekly bar chart just showing sort of the longer term parameters. 170.31, a channel bottom that stems off that July high of last year. The channel top at 253.25, we tested over 2 months ago. And while we were testing it, we'd mentioned how the channel bottom, presently at 170.31, should be considered in reach over the following 3 to 5 months. It took about 6 or 7 weeks. We tested it 3 weeks ago and have come off of it. And now that we've come off of the channel support, we are now mentioning that you should allow 253.25 over the next 3 to 5 months. That is the two-sided framework, the directional framework, the rotational possibilities that we can see as we move through the second quarter. And so from here, from 170.31, maybe you did go long and reach for 245 or 250 strike out of the money calls that don't expire for at least 6 months, as we've been mentioning now for the last few weeks. We don't see 253.25 as a clear-cut objective unless we settle above a trend-defining line study that we see as 209.79, a newly formed descending one-third speed line that is based in part on that low from a few weeks ago. And it has been considered a 3 to 5 week target following the testing of the 171.10 channel bottom on the daily chart several weeks ago, about 2.5 weeks ago. So 209.79 remains a 3 to 5 week objective. We're 2 to 3 weeks into it. Over the next week or two, we should test it, and I will say likely test it above the 190.59 rising channel bottom. This is a line study that I can't remember if we tested it to the tick. I want to say that we did not, that we fell just short, just above the formation. I think it was 188 and change. It's 190.59 today. I'm keeping it as a session containment level because of the heightened volatility. But nonetheless, it has 3 to 5 day swing trade, 3 to 5 day pivot point qualities. In other words, holding above 190.59, I think by the end of next week or sooner, over the next 3 to 5 days, we can reach our 209.79 3 to 5 week objective. That's a 3 to 5 week target above 171.10. On the way up today, I do have 197.81. That is just below about, what yesterday's high was 198.60. So it really is just below Tuesday's high. It is a Fibonacci upside. I think it's a 5/8 as I recall. A 197.81 can contain intraday buying pressures. And, if we push through 197.81, I don't think 209.79 is likely today. But I do say that if we close today above 197.81, we should, within a day or two, by Friday's close, actually reach that objective at 209.79. On the way up, we also have 206.27. This is also a respectable resistance area. I'm kind of going through the charts here, but I'm going to go back to this chart here, which is to say that holding above 190.59, you can buy 190.59, talking to day traders and 3 to 5 day swing traders, because above which 209.79 is likely. I'm going to say over the next 3 to 5 days, where we can top out through March trade and fall away from 209.79. back into the low 170s again within about 3 to 5 weeks of testing 209.79. So keep that in mind. And once again, if we were to close above 209.79, it's not going to happen today, but if over the next week or so we do, then yes, indeed, we are then expecting, with a capital E, the 253.25 channel top. That would probably be a 3 to 5 week play where we could top out through the second quarter and fall away again from there. But in terms of, it's a nuance, but there's reality to it. We certainly allow 253.25 over the next few months above 170.31 to the point where you can reach for out of the money calls or invest in near term Tesla in the low 170s, anticipating the low 250s, both of which are dropping. But in terms of a clear cut, clarifying objective, that would come with a settlement above 209.79. And then if you haven't reached for those 250 strike out of the money calls, you could certainly do so then. You've got a 3 to 5 week upside continuation to the 253 and change, that 253.25 channel top, where we could place a monthly, possibly quarterly high. Let's talk downside today, that if we do break 190.59, the low settlement price is 181.06, and that was put out about 3 weeks ago. I think that's a reasonable intraday target if we break 190.59. And by the way, all the minor points have meaning. They are something to be shown on a chart, either a short-term Fibonacci or a minor trend line or something. But really, in terms of what we would expect if we broke or opened today below 190.59, it would be 181.06. And if we close today below 190.59, we should, by the end of next week or sooner, fall into the low 170s. 171.10 on the daily chart. On the weekly chart, you will find it at 170.31. You've also got 177.25 is a 5/8 long-term Fibonacci that we also tested a few weeks ago. AB. A is the January 23 low against the more recent July 23 high. And that was tested a few weeks ago. Now, if I don't see it this week, but if over the next few weeks we close below 170.31 at the end of the week by a 1% margin, this week is 168.60, then we have a 2 to 3 month sell signal, anticipating the upper 90s, low 100 region within 2 to 3 months. And if under that scenario you would reach for out of the money calls, our recommendation is to reverse, liquidate the calls, reach for the puts, the 100 puts that don't expire for at least 6 months, and that would be the play if you're a longer term options trader. I think that pretty much summarizes it for today. I'm going to leave you with this chart. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow with Thursday's Tesla. You have a great day.